Hi, everyone, and welcome to the week ahead. I'm Tony Nash. Today, we're joined by Capital Flows, Lakshmi Ganapathi, and Albert Marko. Guys, thanks so much for joining us. Cap and Lakshmi, I know it's your first time. I really appreciate you guys coming on. Cap is an anonymous account, Capital Flows. Lakshmi heads up Unicus Research based in Connecticut, I believe, right?
Yes.
Great. So welcome on the show. Today we're going to talk through a few key themes. The first is the macro backdrop in equities. There's a lot going on with the transition to a new administration, so we're going to talk through that stuff, kind of where we are. I want to have a quick discussion about USD versus crypto. With kind of Trump seems to have a strong dollar policy, or is hinting at that, and we have crypto rallying. So I'm not really sure what's going on there. So I want to talk through that. I want to talk through the Middle East and China's energy security with the stuff happening in Syria and with Israel. I want to understand how that impacts energy security for China. And finally, we're going to talk about systemic issues in the auto sector. There's a lot going on in auto. I haven't really paid attention to a lot of it, but Lakshmi's really brought that to the discussion for the past couple of years, probably. So I look forward to getting to that with her. So Cap, thank you for joining us. You've got a great feed, and I appreciate all the time you put into it. This week, you put out a thread on the macro backdrop. You talked through GDP growth and acceleration. You talked through inflation skewed to the downside and equities at the top of their valuation range. So I want to take each of those one by one. It's a lot to digest, but let's take it through one by one. So you have this tweet where you say economic growth is accelerating. Can you walk us through what that looks like and what the components of GDP that you're keeping your eyes on?
Absolutely. Yeah. Thanks for having me on. I appreciate you guys just being able to chat about these issues because I think a lot of the economic data and the macro flows that I go over, I think they're really interesting connecting it to a lot of Albert's ideas, and especially on the geopolitical side, because I think it provides a lot of the why and the narrative behind the economic prints that come out. So on growth right now, basically what, the models that, we're running right now is we aggregate every single economic data point in the United States, model it, see how all the different kind of moves that are taking place are occurring. Why is it that some sectors are contracting and expanding? And basically, when we bring all of those different, points together, we continue to see, I would say, two major things. Number one is we're seeing a regime of low delinquencies and low bankruptcies. And, everyone kind of knows part of that's due to all the mortgage rates locked in at, lower rates, the very strong consumer, a lot of things like that. But that's overlapping with all of this onshoring that we're having, which is occurring as, rates are a lot higher. Historically, when you raise rates, that hits a lot of cyclical sectors, investment, and things like that. Well, the fact that you have those components of GDP, the investment portions that are usually a lot more sensitive to rates going higher, the fact that you see those actually accelerating and showing resilience to the higher level of rates we've had compared to the 2010s is a very clear signal that, the world that we're in today and the regime that we've entered has a lot of discontinuity from the past, let's say even 20 years, right? So you basically approach, this world where you have a lot more onshoring, and that's very tangibly represented in the economic data. That's really clear. And the question behind that is, okay, how long is that going to, move on for, and why is that happening? Which is why I think all of this power play that you have between the US and China and all of these flows you have with, the US continues to import a huge amount of, goods and services from across the world, and how China plays into it and everything like that. All of those things are going to be really critical for, overall growth. So I would say two main things. Growth remains positive in terms of the consumer and investment in the United States. And then we are in a regime of just low delinquencies where there's just so much resilience in the US economy to, the higher rates that we're just not seeing this, really, fast deterioration like you would see, maybe pre the GFC and the run up there. And I mean, that's just represented. I mean, the fact that banks are up so much year to date, financial stocks,
So,
that's just another representation of how strong everything is.
okay, let me ask you a question here because you talk about investment, which is great, but I don't really know. I haven't looked this much detail into U.S. Accounts right now. Is there a possibility that we're double counting the IRA government spending and the corporate investment spending? And does that kind of add a double boost to GDP?
So you're talking about investment from the government versus the private sector?
The Inflation Reduction Act, that capital or that fiscal from the government going into private hands, and then that private spending going into like the TSMC,
Yep.
factory in Arizona, that sort of thing. So, is it possible that we're double counting government spending and investment?
So that's an interesting question. I think there's two sides of that. Number one is so on the GDP side, you're going to have that represent just the total net spending, regardless of the agent it's from, whether that's from the private sector or from the government. So the GDP line item, if we look at just the breakdown of GDP, you're going to have consumption, investment, and then you're going to have your inventories, imports, exports, and then your government line items. So overall, if the government is cutting a deal, right, with any type of factory for a special benefit that they're providing them. For example, TSMC in Arizona, you have some Intel stuff, you have some other kind of semiconductor plants overall. If they're cutting a deal with them, that flow of capital is going to, either run to those corporations or the benefit somehow is going to be reflected in that line item, or it's going to be reflected in the government side if the government is the one directly spending the money. So I would say those, in terms of the GDP account, I would say those are, it's going to be show up in one of those places. And either in the regulation side of like some type of benefit or in the spending side.
Okay.
I wouldn't directly say that it's being double counted in the GDP accounts. Maybe if you're comparing other non-comparable data sets or something like that, or maybe you could then it might be possible depending on the
Yeah.
data that you're using.
Cap, I don't know if you pay attention to my feed. You probably don't, but I like to say things like always.
I missed it.
That's okay.
Sorry.
I like to say things like always wait for the revision, right? So
Sure.
my cynical kind of self would say I wouldn't be surprised if it's double counted now, and then in 2 quarters it's revised out, and we see this GDP growth pull down because oops, somebody double counted it conveniently during this administration, and then it gets revised down in the next administration. So we've seen that over and over and over again with jobs, with GDP, with a number of things. By the second or third revision, it's just changed. Lux, you have a thought there, it sounds like.
Yeah. I mean, with the cap, I have a quick thought to what he said. I mean, I believe you said like the GDP is growing in a right direction. However, what we are seeing is we are seeing a huge amount of charge-offs, especially in the auto sector, on the subprime consumer level. And S&P recently published the data like later half of November 2024 that they expect the US GDP to continue to slow down um, from the trend that is higher this year to slow down as we enter into 2025, accompanied by they expect a rise in the unemployment. And then again, everybody is saying unemployment as U3 is the verified unemployment rate. What we look at is U6, which is like the actual pulse of the unemployment. So U6 is always a little bit higher than U3. So I'd love to hear your thoughts on that, Caps, because, as the delinquencies are rising, I don't know if you guys look into the asset-backed securities market, because especially in the auto asset-backed securities market, uh, there has been in October compared to August or September, there has been a spike in the auto ABS delinquencies in prime credit segment compared to subprime. So it's going to be interesting to see how everything unfolds in the middle of Trump administration.
Yeah, I think that's an important point you bring up because, the auto sector specifically, I think, thinking about it in terms of its contribution to overall, right, GDP, right? Like I think it's an important part because you basically have two major components that people take debt out on because you have collateral to take it out against that you can actually, take the collateral. It's houses and cars, right? So you have more sensitivity to those things for just interest rates and things like that. So I think on the auto side, like we are seeing obviously that change on the supply side where you're having just more normalization, right? And we're coming from a period of time in 2023 where real growth was at 5%. We're coming down and we're probably getting back around 2%, right? So I think you're going to see some dispersion where you're going to see some sectors, fall and, some sectors rise and things like that. Overall, what I would say is, auto sector, employment, right? And then just auto sector spending is an important thing to watch. And I think you'll have the equity side of the market for any of the companies that are connected to that. Because I think that's a great kind of setup for any type of trade that you want to run where you're trading the auto sector against less cyclically sensitive sectors.
Yeah,
Um,
let's not get too deep into auto yet because I want to
totally. Yeah,
hit
sorry.
that
Yeah.
last.
Yeah.
But Cap, I'm just curious. So your outlook for GDP, do you continue to see things growing at the pace that you've seen in, say, the past couple quarters?
No, I would say we're probably going to get to this 2% level and probably moderate around there. And
Okay,
we saw that happen earlier this year where, growth kind of went from, 3 to 2 in real terms, just
right.
broadly speaking. And people over extrapolated that to the downside. You had the August sell-off where people thought the world was falling apart.
Yeah.
And, we're normalizing, right? I think of 2025 as a year where you're still going to have probably go around 2%, and maybe you have it, depending on how fast or how many pauses the Fed does, you could have it, pushed to the 1.5 to 2% level.
Okay. So I want to talk about inflation for a minute. Your second point is a chart that you have from Bloomberg saying that inflation is skewed to the downside. So do you expect that to continue into 2025? And I want to kind of put that in the context of the expectations for a Fed cut in December. I think it's at 70% now or something. So are you on board with that? Do you think, given your expectations of inflation trends, are you on board with that? An expected 25 basis point cut in December.
Yeah, I mean, I think we'll have 25 in December and then a pause in January, and that's marginally what the market is pricing right now. And that seems to be like the setup for what is going to actually take place. What I would say is that the right decision for the Fed or not? I would say that it's a reasonable decision, and I think we've seen 3 months of inflation data not decelerate. We haven't seen it, come in, hot or anything like that, but we've seen it just not decelerate as fast as it did on a rolling 6-month basis. So the answer in my mind is we're likely to have inflation, expectations are already set for a 10 basis point deceleration in core CPI next week. I think that sounds very reasonable to me. I think inflation falls, especially if, crude falls with the, kind of Trump presidency and administration switch. I think we can have another, I would say, 2, 3, 4 months of inflation falling, and I think the normalization and growth is going to help that a little bit. And the high, I mean, we pushed up really high in rates, over the past 3 months.
Yep.
That in itself has a tightening impact and a downward pressure on inflation and growth.
Right. So Okay, so especially if they say that healthcare declined 30% again year on year, right? I mean, that'll definitely make things look okay.
Absolutely, absolutely.
Okay,
Shelter, shelter is also a big component of it, and that's certainly coming down across the. I mean, Texas and Florida has seen pretty big drops in the pricing of houses and rent on top of everything else. I do think that he's correct on the price of oil helping out on inflation. Besant is, privately told many people that he's intent on driving the price of oil down, and you can't really fight, the Treasury Secretary as we saw what Yellen was able to do. So yeah, I mean, I could certainly see Cap's uh, forecast of inflation coming down, especially in the next 2-3 months, maybe 6 months. But at some point, these Fed rate cuts and the economy, at least the sentiment for the economy firing up is going to have its day of inflation coming back probably towards the end of 2025, maybe into 2026.
yeah, are we to the point, guys, where kind of the perception of Trump Besant policies are more powerful than it could potentially be more powerful than the reality once they're in office?
Right now, yes.
That I
Right.
get the same sense. Yep.
Right now, yes. But until you actually, we also have to remember the Senate is not very friendly with Trump.
Yep.
Right? They've already made comments to the contrary of what Trump wanted to do. So
How much of that is McConnell? I mean, the guy
Of course
strokes
it's
out once
McConnell.
a week. Like,
Of course it's
is he going to
McConnell.
be there for a while?
Yeah, either him or his minions are. So what's the difference? He's still pulling the strings behind the scenes. So it is what it is. And
Right.
listen, you got to understand this. Senators think that they're just as powerful as the president, and some instances they are, right? And they're not going to give up power, and they're not going to give up policy just because Trump wants something done. It's
Right.
just not going to happen.
That's why we have three branches of government, right?
Mhm.
So okay, good. Cap, finally, you say that equities are at the top of their range. So this is really interesting to me. So could we see valuation expansion from here? Why or why not?
Yeah, so the main thing everyone's looking at is the fact that equities are really rich from it right here, right? They're at the same levels in terms of valuations that they were at the end of 2021.
Mhm.
Now, that's not calling for a bear market or anything like that. Actually, if you think about it, the valuation component just means that there's a higher barrier or higher hurdle rate to have more positive returns. So if I think if at the end of 2021, if we didn't have the Fed cutting, or excuse me, hiking, probably wouldn't have had, the type of pullback that we had, right? Even with valuations so high and so stretched. So, in my view, if you have valuations, pretty elevated price to earnings, price to sales. If you have interest rates fall into positive growth, that can cause another valuation expansion in equities. So that's the key signal to look for because overall, when we look at the drivers in terms of the quantity of money in the system and just growth, probably not going to have growth surprise to the upside over the next 3 to 4 months. Probably not going to have the quantity of money in the system expand a ton. And so the main place that is going to come from is going to be the interest rate side, which is dependent on inflation. The the one thing I would say is if for some reason we had an inflation print come in way above expectation over the next 3 months, that is almost certainly going to drag on equities and pull them down a little bit because of, inflation is fundamentally a contractor of liquidity. It's contracting liquidity in the system. So that's how I think about the equity situation right now.
Okay, so if I understand you correctly, you're not saying we're necessarily going to have acceleration of earnings growth. You're saying that the context would require an expectation of valuation expansion. Is that fair?
Correct. Yeah, I mean we're basically really rich in terms of valuations right now.
Mhm.
Earnings are probably not coming out way above expectations to justify those valuations.
Okay.
So,
Lakshmi loves to
yeah.
short, so I suspect she's
Does
really
she really?
jumping for
Oh no.
joy with what with what you
She's a
said.
lot
No, no,
braver
no.
than I am.
I'm not what some would call like skeptic about every single thing that's publicly traded. We do well on shorts, in bull market as well. It's because picking up on companies that are way crappier than others. So I don't want it to go deep into it, but
I just had
fine.
to throw that in, like just to keep it spicy. Okay. The other thing, Cap, on this is we had earnings expand based on inflation, right?
Mhm.
So companies expanded their margins based on inflation expectations. So as we have inflation moderate, and I watch a lot of college football. I see the McDonald's $5 menu and these sorts of things on Saturdays, during college football games. Companies are moving toward kind of value pricing. So how does that mean that earnings are going to maybe contract in certain ways? Or how are companies going to keep their earnings at the pace that they've kept them at, given kind of where we are?
What do you think, guys? Is that to me?
That's to you. Yeah, that's to you.
That was
Sorry,
for
Cap.
you.
Yeah.
I mean, I can interject all day long.
Yeah, I mean, I'd love to hear. I love to hear your thoughts too. It's an interesting one. I don't really have a specific view about individual companies, like at the moment in terms of McDonald's or value pricing or something like that. I think overall the main, weighting obviously in the index has been, on the tech side, and I think you continue to see the AI, side of things increase productivity. Just overall, we continue to see that, and I think that's helping a little bit in terms of margin expansion and things along those lines. What I would say is unless we I mean, I think the entire tech side is just like this massive growth machine that's only being fueled more by AI, and it's really hard to stop that train. I would say the main risk to tech is if inflation comes back up and we have like this 2022 moment again where tech underperforms. That's the main risk to tech in my view. On the other side, where you have all these cyclical companies that are more connected to durable goods, that is more about where we're at, in my view, on the geopolitical front, in terms of where everything is going to play out in terms of imports and exports and that China tension that we have and how the tariffs are going to impact that, which I think is going to be very instrumental for things like the Russell, things like the Dow, and companies in those sectors.
Okay.
Yeah, I mean those earnings that we saw in the past 2 years that were obviously benefiting from inflation. I don't really think that that's going to change. I mean, the inputs that these companies are seeing are still elevated. I don't think that the CPI is even a real number at this point anyway. So it's like it's completely
It's an index. It's by definition, it's not a real number.
yeah, it's massaged anyways for political purposes, and it's just not real. So these corporations are still seeing inflation elevated beyond what CPI is, and I think as long as the inputs stay elevated, that their pricing is going to stay elevated. It's just the reality of the situation.
Yep. Okay. I just want to go one thing back to Cap, and I just want to get all your thoughts on this.
Sure.
I have a running hypothesis that China is actually going to end up working well with the Trump administration because nationalists like to know where the other side sits. You look at China and Modi and Putin and other people, right? With Trump, cards are on the table. Everyone knows his positions. They like clarity. So, of course, they'll voice certain things in public, but I think their actions will show an alignment. And I think that will take the form of more Chinese FDI into the US, similar to what Japan did in the late 80s, early 90s in the US. Tell me I'm full of it. Is that reasonable at all? Anybody?
Yeah,
I think
what was that, Albert?
No, I think it's absolutely correct. I think that both nations view each other in a symbiotic way going forward. It doesn't benefit either side to have some kind of full blown trade war where where prices just get to be ridiculous levels. It's just but the Chinese are already hurting economically. The U.S. wants to keep this train going, so it's why rattle the boat? I mean, you can talk politics all day long in front of the cameras, but behind the scenes, I assure you they'll be working together.
Yep.
Well, let me ask you this, because I think about it in terms of you have China running a huge, current account surplus so that they can get dollars, right? And you have this kind of dynamic where the US has in my mind, obviously the global reserve currency that's not going away, which which makes it really easy for them to run a current account deficit and a budget deficit, right?
Mm-hmm.
So, you know, for China there, they want to put some type of, you know, limiter on them or tariff or whatever it might be. But I think the issue is, what we've seen is, if the US puts those tariffs just on China, China tries to go through a back door and export by proxy, right? And they're still running a current account, surplus. So, my question is, it seems, I mean, the current account surplus by China is it seems like a very geopolitical, intentional strategy kind of play on an economic basis. How do you think about can can the Trump administration even, like thread the needle, or do they have to do tariffs on everything so there's no, so China doesn't export by proxy? Like how do they thread the needle on just China and not without,
I don't
crushing
know
other
how
countries?
I don't know how they're going to possibly do that because I mean, obviously NAFTA comes into effect. On top of that, Congress is actually in charge of trade, right? Not the president,
Right.
right? So this has to go through, and I assure you that the Senate is already looking at this, right? They're not going to sit there and have unilateral moves by Trump without some sort of pushback from Congress. I don't think he's going to be able to do something specifically to pinpoint China. What I do think he will try is to specify exports from the U.S. on chips and semiconductors, as you've seen before. I think the battle is more about between U.S. and China is more about AI and semiconductors rather than anything else, whether it be autos or agriculture or anything else at the moment.
Maybe. Lux, what do you have?
We have been a strong believer of a free trade, democratic nations. It cannot do a transparent business with any authoritarian regimes, and we have been, for lack of better words, not that much fan of China because we are very concerned about the intellectual property theft. We are concerned about national security issues. And so if Trump really meant every word he said about protectionism, you know, he doesn't have to go full blown. However, China, tariffs are kind of essential on China because from automobile to everything, it's hard to we started to rely on China for cheap labor. And then now we are so intertwined, we can't pull ourselves out. So our take is, a strict measure against China is critical from a national security point of view at this point.
Sure. So I think my first kind of flippant answer to how will we track what China is exporting through what countries is, the blockchain solves everything, right? Well, I'm kidding about that, but
I was like, wow, that's a
no,
sorry.
I'm completely kidding. But in terms of the harmonized tariff system, which is how you levy tariffs, the tariff is levied on the point at which the component changed nature. So if they ship knockdown goods to Mexico and they're simply assembled in Mexico, then it becomes a Mexican good in the tariff handbook. Okay, so if China wants to ship their semi-manufactured goods to the U.S. or Canada or Mexico and have them assembled here, great, it creates jobs, right? I mean, I think that's part of the view that people will have, because whether or not it's actual tariffs or whether or not it's 100% American made, I suspect that China knows. And I spoke to these guys. I spoke to the NDRC on the eve of Trump coming into office in 2017. And they're not, I mean, they're smarter than you think, but they're less aware of what their options are than you think. And so I think some of these things really need to play through. And once they discover they can just do some investment in the US to assemble knockdown goods here or in Mexico, I think that discussion will change. Let me move on to the next kind of transition issue. Let's move on to US dollar and crypto. So, guys, over the weekend, we saw Trump announce that he'd level 100% tariffs on countries that try to develop a BRICS currency. So stressing the primacy of the US dollar. So at the same time, there's an expectation that Trump is going to push a strong US dollar. So he's supportive of crypto, but he's stressing the supremacy of the US dollar. So what does that mean to you? Do you see a long-term strong crypto market? Do you see a long-term strong USD market? Are those even at odds? Can they be complementary? Cap, why don't you get us started and then we'll go around.
Is the question primarily about the supremacy of the US dollar in terms of that changing?
No, it's US dollar and crypto together. Like, can those
okay.
both strengthen together, right? Because the hypothesis underlying crypto is, well, fiat is garbage, so, we're going to invest in crypto. So, but if the US dollar is appreciating, it's just fiat, right? So, that means my assumption is that if the US dollar is garbage, then crypto is rising. But if the US dollar is rising, then what happens to that crypto hypothesis?
I see. Yeah, I mean, when I model all the crypto flows and the different kind of conclusions we can draw from that, in my view, it all has to do with the amount of dollar liquidity in the system due to the dollar being the reserve currency. So, the fact that other countries will hold US dollars, even though it has a negative real return, is an indication that, they're taking some type of negative benefit to hold US dollars so that they can, export goods and services to the United States. Any current account transaction has a commensurate and netting out capital account transaction, right? And so that capital account side, the dollars that you receive from that have to be placed in some type of dollar denominated US asset. And crypto is one of the release valves for that liquidity in the capital account for countries like China or Japan or whatever else it might be. So I think overall, if the US dollar began to lose its supremacy in terms of a reserve status, then I think you have an issue with crypto, actually. But
That's hilarious, actually. I love that.
Say
that one more time for the people in the back.
I think if the US dollar loses its reserve currency status, that's negative for crypto because you have less dollar liquidity in the system as a surplus just sloshing around.
That's hilarious.
So like that's I mean, I think that's why you have, currencies like USDT, right? And the reason those exist is because people want some type of dollar in China, right? Like a lot of the existence of that has to be from China itself and people wanting some type of proxy for US dollars, even if it has credit risk behind it, right? Because China is taking all the dollars and trying to use those for geopolitical purposes. So like the actual people in China, they can't get dollars, right? So, I think overall in terms of crypto, you basically have this reserve currency status of the United States it's in many ways not beneficial to the citizens of the United States, but I think you have that exist and you're basically trying to deal with the inflation that comes as a result of that, or if the different, Fed policies that create inequality or things like that. And you're always trying to manage these risks as you hold the reserve currency status. And I just view crypto as like a release valve for macro liquidity within that structural regime.
Wow, that was very smart. Albert, what can you add to that?
Not much. I mean, it's pretty well said. The only thing I want to talk about is Trump's BRIC comments of the U.S. dollar versus crypto. Well, that's all fine. And first of all, there's no BRICS currency anyways. It's just a myth, right? But what happens if China comes out and says, well, the BRICS currency is going to be crypto? And then what are the policies? What are the policies then? You're going to sit there and start dividing up which crypto is okay and which isn't, right? Especially from the U.S. government policy standpoint.
What happens? Sorry, Albert. What happens then, though, if China says that the BRICS currency is crypto, then the central bank really like they can't really exercise their own monetary policy on some level, right?
Well, no, I mean it's the same thing as the euro. I mean the
Right,
euro.
exactly.
No, listen, this whole BRICS currency thing is nothing more than a Ponzi scheme
Right.
to get resources from developing countries back into China. So
Yep.
that's what that is, right?
Yep.
But I mean, the point is if Trump is saying that crypto's okay for whatever reason, but BRICS currency is not okay, okay, that's fine. But if BRICS currency decides to be a gold-backed crypto coin, what's Trump's position on crypto at that point?
Probably
Yeah,
probably
jump in.
anti-crypto.
Well, of course it's going to be. Of course it's going to be anti, right? Of course it is. But like, how do you differentiate between BRICS gold-backed currency, crypto coin, versus Bitcoin? At that point, if you're Trump, you're not going to be able to. You're going to have to. You're going to have to hit it across the board, and it'll be a negative. It'll be a negative thing. So I mean, the comments that are coming out of Trump's mouth is still political at the moment. I don't think that any of that stuff, any anti-crypto stuff is going to come out to play at the moment.
Right.
I actually think that crypto is probably going to appreciate as the economy heats up at the moment.
Okay.
Right. So that's where I'm looking at right now. And the US dollar is going to stay elevated for the entirety of Trump's term.
Yeah, whenever people talk about a BRICS currency, one of my first questions is the Asia Infrastructure Bank, the AIB, the Asia Infrastructure Investment Bank, what currency do they lend out in? Okay, that's a question. What currency does the BRICS Bank lend out in? They lend out in US dollars. So these are BRICS institutions that their loans are extended in US dollars. So it's just as silly what you said at the beginning, Albert. There isn't even a BRICS currency, and even the BRICS nations,
No.
their institutions are lending out in US dollars. So this whole thing and all the hype about it is just silly. Until they start lending out in rupees or CNY or something like that, it's all just hype. That's all it is. Lux, what do you got?
Yeah, of course.
Oh, no. I was just
Just
listening to
agreeing violently. It's great.
what's that?
I said just agreeing. I appreciate that. So, Albert, let's move on to since we're talking about China, let's move on to the Middle East and China's energy security. You put a piece out on Cloak and Dagger last week titled "The Loss of Middle East Influence by Both Iran and Russia Could Threaten China's Energy Security." So, with all the stuff that we've seen in Syria over the past week or the last 10 years or whatever, and with Turkey's assertiveness displacing Iran in northern Syria, and with Iran losing influence with Hezbollah and Hamas and all this stuff, China's two closest allies in that region are Iran and Russia, and they both seem to be losing influence. So is there a potential derivative problem downstream to China's energy supply chain if Russia and India or Iran lose influence in the region?
Yes and no, right? I don't think that Russia nor Iran are going to lose supply chain capacity to ship to China. I don't think so. However, I do think that both the Iranians and the Russians will lose leverage in different parts of the world in order for them to be able to manipulate oil prices, right? Like in Libya, for instance.
Yep.
Right. The Russians in Libya caused problems to take that crude off the market for many years, right? If you lose that, then suddenly you lose the ability to set prices that are beneficial, especially for the Chinese. I mean, the Chinese want the lowest prices they can possibly get, bottom tier, right?
Right.
And then the Russians want the highest prices. So it's like,
Right.
yeah. So, they have competing interests globally, but the Chinese have the biggest problem that if the U.S. and OPEC have better pricing options and more leverage, that the Chinese are going to end up paying up for it. And it's going to weigh even heavier on their industry, which is taking a hit.
So between Russia and Iran, they comprise about 30% of China's crude supply.
That's more than that. It's more than that because I mean,
Okay.
whatever you see of China buying from Iraq, it's really probably about 50% Iranian.
Okay.
Right. They just mix it. So it's probably up in the 35, 40 percentile.
Okay. So you say there really isn't a risk of their supply chains being in danger. So But
Not so much.
I guess so. If Iran loses influence in Syria and with Hezbollah and other things, does that create domestic pressure in Iran for regime change? I don't want to sound like a CIA plant or anything, but I just want to understand, like, if they lose that regional influence, could there be pressure domestically to change?
I think the better question is, could the IRGC losing revenue force the theocracy to do things that they don't want to do?
Okay, do you want me to ask that?
No, I just asked. And the answer is yes.
Okay.
You know, I mean, listen, the IRGC makes God knows how many billions a year on illicit arms and illicit oil sales and mineral sales and whatnot. If they lose those trade routes, if they lose those contracts, lose whatever supply chains that they've been manipulating, it's going to be a problem for the IRGC. And they're a money hungry corporation like anything else, right? And so
Right.
I think that they will push the theocracy to do things that the theocracy probably doesn't want to try under Trump.
That's interesting. Okay,
Can
just for
can I ask
context,
a question?
yeah, go ahead,
Oh, I
Cap.
mean, yeah, I'm curious. So on the oil dependence issue, kind of going back to what we talked about with China earlier, where like the tariffs thing is difficult, and then the export by proxy and things like that. Is there a world where, the U.S. says, okay, maybe we can't thread the needle here, but is there any way we can get China dependent on us for energy and put pressure on other countries in terms of Russia or the Middle East to pull back some type of supply so China has to start depending on the US for oil? Or how
It,
do you
it,
is
it
that
would,
just kind of an wrong question, or how do you think about
well,
that?
no, it's not a wrong question. I mean, I'm sure the Chinese will start buying U.S. crude and
Nat
you know
gas.
and nat gas
Already buy some nat gas.
just because of the negotiating power that would give them in trade. But the Chinese are very price sensitive, and American stuff is pretty expensive on the market. So it's a yes and a no. Yes, they will increase U.S. Imports because of leverage and trade leverage, but no, they're going to continue on with Middle Eastern and African and South American supply as much as they can.
So
So you don't think, sorry, Tony.
go ahead,
You
go
don't you
ahead.
don't think that the US there's any type of play where the US could try to put pressure on the Middle East or Russia somehow that kind of pushes them to stop providing so much crude to
It's
China?
it's
Or how do you think
hard.
about that?
It's hard because the United States' production is it's at max capacity right now, right?
Right.
And to do something like that for the U.S. to, well, first of all, I mean, Marco Rubio would be leading that, which should be hilarious. But to do that, you would risk your allies' interests, like Saudi Arabia, that's already been cutting down for OPEC supply for a long time now. So I don't. I mean, I'm sure they'd try. I would try. I just don't see. I don't see like a very clear cut path of how you would thread that needle without upsetting things in the OPEC world.
Okay.
Yeah, I think that's fair. I just want to go back, Albert, to what you mentioned about the IRGC, just for context, particularly for Westerners who are watching this. The IRGC has many businesses. The Turkish military has many businesses. The Indonesian military has many businesses. The Chinese military, the Pakistan military, all these militaries have businesses that they run. So it's not surprising that the IRGC has its own revenue kind of driven model outside of defending the country and doing other things. This is very common in parts of the world where the military actually runs part of the economy and actually runs businesses. So what type of changes do you think the IRGC would force upon the theocracy?
That's really tough. It really depends on what the price of oil settles down to. If it goes down into the low 50s, I do think that the IRGC will push to create problems in Libya, Africa, probably in Venezuela, South America, and then those regions. It really depends, Tony. I mean, it depends on what supply chains get interrupted in Africa, what supply chains get interrupted in South America, and what the price of oil is. And it's really hard to say now what the IRGC would do, but I assure you, as the revenue starts dwindling, that they will
Throw their weight around.
they will try to figure a way to up it.
Awesome. Okay, really interesting. I want to learn more about that in the future. So let's move on to the automotive sector. Lakshmi, you put out this piece earlier this week, or no, last week, sorry, talking about systemic issues in the auto sector. It's not your first dip into the auto sector. You've been covering it for years. But you talk about the MSRP of new cars will kind of fall back to trend or continue falling in 2025. You talk about the average dealership has experienced a 32% decline in variable gross profit since 2022. So, I'm just really curious. Excuse me, I'm really curious. Pardon me. I'm really curious. Help us to understand why this is the case. Because I look around at cars and they just seem to be getting more expensive. Maybe not, but that's the perception. And I'm curious where the problems are and why they're there.
Well, thank you for having me, Tony.
Of course.
And it's a pleasure to meet Caps and Albert as well. Um, we have been following electric vehicles and OEMs, auto OEMs, and dealerships for EVs for 5 years and OEMs and dealerships for a couple of years. And what we have noticed is that, in a nutshell, it's great. It's absolutely great. There is no sugarcoating this. EVs is because of the subsidies and automobile OEMs and dealerships. The prices of the cars, Jeep is for $100,000, 115,000 for Jeeps, and also it started in COVID. Just to give an overview, it started in COVID. You have stimulus coming in to boost the economy, and consumers who have the stimulus, $3,000, $2,000 for kids. Don't quote me on the numbers, but the barrage of stimulus happened, and some consumers, put it in savings, but most of the consumers paid down their debt. So we spoke with all senior analysts from the credit rating agencies. And what happens when the consumers pay down the debt with the stimulus is their credit score went up. So they were exposed to a lot of credit all of a sudden. And so now the OEM started, whether we like it or not, the show of wealth is the norm. And people like to drive fancy cars.
Yep.
So they wanted to buy cars, and the OEMs like Stellantis of the world, GMs of the world started to, okay, fine, now we can jack up the prices so we can get the margin. So they started manufacturing cars that are actually crappy and expensive.
And they track your every move now. The cars track your every move.
Yes. Right? And
so they're selling your data.
Yes. And it's very expensive. And we spoke with so many dealers over the past 2 years, and some of the largest non-publicly traded dealerships that carry Stellantis. And what we are hearing is, if you listen to conference call of these publicly traded dealerships and OEMs, you will listen them saying, oh, we are getting so much huge margin in maintenance. That's because they manufacture, the theory is they manufacture crappy cars so they can come back into the service. Wow. So they can get it on the tail end of the maintenance aspect and increase the margin there as well. Sadly, it's not a conspiracy theory. It's a kind of a fact. So when that happened, consumers are in a problem. I'm sorry, I'm going back and forth because it's like all weaved together.
Yeah.
So they go to the consumers started getting loans, and banks like Ally and other captive finances, they started to give them loans for any and everyone who have heartbeat. Right. So if you have 500 credit score, 600, 700, 800, I don't care. So I give you a loan, and you have consumers. It's not stereotyping, Tony. If you can see consumers who can't afford and live paycheck to paycheck, and they are driving Mercedes because they are paying $500 on a monthly payment for 23 years. I'm not kidding. They are having car payment for 23 years.
Really?
Yes.
23 years.
Yes. You
Wow.
can't make it up. Yeah. So they are okay with that. So this creates a problem that we have been talking about, and the mainstream media just picked up. It's negative equity. So negative
Yep.
equity is like when you trade in the car, the value you get for the trade-in, it's a lot less than the loan that you're paying for the car. So when you're rolling over the car, you're rolling over your negative equity. So which means we are in a situation where the auto industry is going through a sea change, and our research indicates that some OEMs and dealerships are not going to make it past 2025. So last week alone, you have Nissan CFO quit. They have 12 to 14 months to consider themselves as a going concern. They are looking for ways to, trying to stay alive. We have CEO Carlos Tavares of Stellantis. Now, let me go on the record to say is Carlos Tavares is the worst CEO in the recent history. And that
We need to have you on more.
what's that?
We need to have you on more. I love it when you say stuff like that.
Stellantis is the most mismanaged company that ever exists. We have dealers having cars on their lots for more than 200 days.
Wow.
And
What's a normal market?
so normally a dealer can sell 50 to 100 cars a month. Now if they
Okay.
sell 5 cars, they're lucky.
Per
So
month.
yeah, so this is like a huge,
Whoa.
huge issue, and it's a huge topic. And what's happening is when you're having a car, most dealers finance their cars through banks. So they have to pay something called floor plan expenses.
Hmm.
So now you will say, or Albert or Caps or Tony, you'll ask, okay, fine, why all the stocks are up? Because everybody is kicking the can down the road. So banks are saying to the dealerships that, hey, you know what? So why don't you just like forget about this and pay it to me? Like, let's push your floor plan further down the road. So I won't default you in my books, because if I do that, I am so exposed, then I will collapse. And if I collapse, other banks that are lending money to the other dealers, they will collapse. It's like a house of cards.
Oof.
So, and the dealers are telling, who are providing captive financing to consumers, are saying, hey, you know what? You want me to reduce the $1,000 every month payment to $200? Can you give me $200 every month? Okay, so now let me kick the can down the road and give you 23 years of LTV.
Wow.
And then dealers, and in case Stellantis, are at war, and Stellantis refuses to provide any kind of discount to manufacturer discount to the dealers. So the
Wow.
dealers cannot push anything out of their lots. So these dealers we have been speaking with, we recently published a report to clients. The dealers we've been speaking with, they are discounting $115,000 Jeep down to 80 to 70 to 60. So they are taking a huge cut in their margins.
That's
So
amazing.
publicly traded dealerships are getting squeezed on the margins because they're taking a hit. They want to get the car out. Privately owned dealerships are quietly going bankrupt
Oof.
starting
Wow.
November. It's a huge mess out there. I'm sorry, I went a little bit
No,
over.
no, no. This is great. I'd heard about a couple years ago. I heard about someone was saying auto loans are going to go into huge default, and I think that was in 2022. I heard people start to say this, but I really haven't seen a whole lot yet. But where you're telling me is this has just been kicked and kicked and kicked, and so what's when does this become a major issue? Like, can these dealerships afford to keep this stuff on their balance sheet? Or, you're saying the discounting of Jeeps, will that happen with other cars as well? Because I want my $5 value meal on cars too.
So the So CDJR is the American brand that Stellantis bought. So that is Chrysler, Dodge,
Jeep.
Jeep, and Ram. So our research so far indicates that companies like Nissan won't survive past 2025. Jeep brand will not survive next year, right?
Wow.
This is sad. This is really, really a disturbing period in the auto sector. There is going to be a huge consolidation and a huge wave of bankruptcy. And COF management, Capital One management said, and I'm reading from the code, is that we should remember that millions of consumers who would have charged off under normal circumstances during 2020, 21, 22 avoided defaulting thanks to stimulus and forbearance. So the current government slapped stimulus, slapped forbearance, and pushed everything. Now everything is going to come into 2025 to 2026. And we haven't even started talking about the ABS market.
Wow.
So the delinquencies are going up, Tony, both for prime and subprime.
Okay.
Do you think or when do you see those delinquencies actually impacting the balance sheet? Because it seems like they can run the Ponzi a little bit longer, right? And you might want to be, I mean, if these companies are being so deceptive to do all this, I mean, it sounds like they could go a lot higher, right?
They could, but here
Hmm.
is the problem that's coming in. So if you see companies, publicly traded dealerships and companies and OEMs, they are all doing this asset-backed securities on the auto side. And because of the yield, it's been going well since 2020, all the way till now. For the past 2 to 3 months, what we are seeing is an increased spike in prime auto asset-backed securities and subprime. Prime more than subprime. So yes, they can kick the can down the road to 2025, but now it's a matter of as this auto ABS increases, delinquencies increases into 2025, and everything has started to fall down, there is a real problem. So no, I don't have an exact date on when this is going to fall down. However, dealerships, banks, captive financing, shadow lenders like CACC, they all waiting for who's going to blink first. And everybody is relied on somebody else, and one person fall down, because we do have big chain dealerships that went bankrupt last year. And we are expecting more to go down coming year. So, Caps, to answer your question, yes, they can, but not much longer.
So I
Yeah.
know it sounds really dumb, but how big of a glut is there on the market I mean, just as an estimate in terms of percentage of new cars that are on lots? Is it 30%? Is it 50%? Is it 10%? Like, how big of a glut do you think there is on markets? Just a wild guess.
More than 30.
More than 30. Okay.
Yeah. But over the past 2 months, all the dealerships are taking a huge hit for their balance on their balance sheet and just trying to get rid of the cars, but heavy discounting. So we can see the metal moving, so to speak. However, their margins are getting killed. So when the dealerships report in January, fourth quarter, you can see expect some auto OEMs writing off some numbers, and dealerships margins are just getting completely squished.
Okay, so here's my real question, and I think Albert's interested in this as well. When will we see heavy discounts on G-Wagons? Because that's what everybody wants to know.
I mean, you can just do the good old shakedown to all the dealerships. You can take, I mean, we are speaking to all the dealerships. They just want to move the metal. So you
Really?
can say, hey, X, Y, Z said he's going to give me this much. If you're not giving, I'm going to that guy. So you can do like a pretty much good shakedown, and they will cave.
Really?
Let me tell you a story about the glut of auto dealers and whatnot. These bastards, they go and they buy lots close to where they know natural disasters happen, specifically in Florida. I know this for
yes,
a
I know
fact
that,
in
yes.
Florida. And they sit there and they buy lots, right? And they put all their brand new cars in areas that they know will flood, they know that'll get by tornadoes, so on and so forth. So they get rid of that excess inventory due to, on the insurance companies, basically. They say,
Wow.
can't happen. Or it was in Texas. They do it in Texas too, by the way. They're like, oh, look at all the hail damage, cars totaled, so on and so forth. That's how they get rid of some of it.
And you know what they do to the total cars? It's a very good point. They take that total cars, they do some bare minimum fixing, turn it around, put it back into the inventory as the used cars, and they try to sell the used cars because new cars are manufacturers are refusing to cut the prices. So new car prices are so arrogant right here, and the used car demands are going up. Like Albert said, that's exactly what they're doing. They're going to turn that around. They are turning it around, do some bare minimum fixing, put it into the used cars, consumer get it with an LTV of like God knows how long. Wow. And they drive for 2 years, 6 months, and they break down. They go back to fix the car.
Yeah. On top of that, they sell it onto the auctions because they know that the Europeans, the resale value for like certain cars like Mercedes or BMW or whatnot are so high, right? They can get the they can get the insurance payout and sell the car on the auction and still make money on it.
Yep.
Okay, so Lux, I want to ask you about one thing before we go. You said that the manufacturers make crappy cars, so they make money back on the maintenance, right?
Yeah.
So, and you say that's a proven fact. So, when you buy a new car, how long is it before it goes in under maintenance? Typically, like in your estimate. Again, I know these aren't hard figures, but I'm just curious.
I mean, I have to check my reports. Happy to share it later. But the point is, it shows in the number of recalls. If you go to the National Highway.
NHTSA, yeah.
Thank you. If you go there, it will show, if you put a company in, it will show the recalls. Nissan and Stellantis have had the highest recalls in 2024.
Yep.
Their quality is completely down. We spoke with the mechanics. So that's how we know that's going. The failure of airbags, car not starting, all kinds of problems. Nothing very, it's like you could have tightened the screw a little harder so it won't break down.
Right.
And so the workers who are doing it are not doing it in a proper way.
Yeah. I owned a Nissan when I lived in Singapore, which means I paid about $200,000 for it. I will never own a Nissan again. It was the biggest piece of garbage I've ever had.
They just had a recall for Ford Broncos. I think 100,000 cars have to get recalled for Ford Broncos because the whole EcoBoost engine has to be replaced. The whole engine.
Wow. Wow.
Yeah.
That was just like today or yesterday.
All right. So Lakshmi, what are you looking, like you mentioned Stellantis and Nissan. What else do we need to be looking at in the auto sector? What other companies are you looking at? Like, are you looking at like Lithium Motors, like those types of dealers?
Well, Lithium Motors is a rollout, right? So we used to recommend that as a short. Our clients, we don't talk about our ongoing shorts, unfortunately. But we used to recommend LID as a short, and it worked out for a while. But however, they have a lot of cash and they have a lot of access to financing. We asked the clients to take profit. We wrote a cover, never look back, right? LAD, is it perfect? No, not really. But they do have cash. They do have access to financing. So they can buy whatever they want. They buy independent dealerships and they then sell off the dealership that then make profit. That's how most dealerships are. And then you have crappy companies, dealerships like CarMart. And we recommended CarMart around 110 something as a short, and this is Carmot is the kind of company that like slowly limps its way to bankruptcy someday.
Yeah.
And it went from 120 to 60, it traded sideways, and now it's in 40s.
Wow.
Very careful about where to buy the cars. Asbury Automotive ABG has the largest exposure to Stellantis,
Okay.
right? I think one of the CEOs, I don't know whether it's Sonic Automotive or ABG, shamelessly mentioned in their earnings call that, MBA students need to do a case study on company on how worst it's managed, like Stellantis. So they hate these guys. Dealerships and Stellantis and OEMs, they are constantly at war.
Wow.
So yeah, Ford is in a huge trouble. I mean, unless I don't know if a Trump presidency and government will bail out Ford.
Oh, they always bail out the car.
They will.
Automakers. They
will.
always bail out the banks.
If there's a problem in the economy where they manipulate a fiscal crisis, auto sector will certainly get a bailout.
Yeah.
I don't know what it'll entail, but
yeah, the auto sectors will get, the main big guys will get bailed out. What won't get bailed out is the American brands that's got sold out to Stellantis and the dealerships that are not big roll-ups.
Private dealerships.
Those will die.
Okay, so I want to close this out going back to capital flows. Cap, you started the show talking about GDP and talking about low delinquencies and other things. So as we talk about automotive, does this give you a little bit of pause on your go forward assumptions, or are you still pretty confident with things going forward for the next couple quarters?
I'll be 100% honest with you. After kind of like listening to everything you broke down, it just sounds like I want to be long these companies because they're just going to pump another 20 or 50%. That's just me. I mean, I'm a trader, so like I'm always like I just feel like I hear someone like break down a Ponzi scheme, and it just like I just think anytime a company is actively, trying to manipulate their financials and to screw over investors, I'm buying out of the money calls. But welcome to the world that we live in. But I think it's I think the points that you lay out are super important, and I'd be watching those really carefully. I think the auto sector in terms of delinquencies is a reasonable amount, right? Like if you have an issue with that part of your budget, right? So I think that, and watching that in connection with housing is going to be important into next year. The actual setup itself is not. I'd have to see that transmit through other economic data points, right? Because you can always have a dispersion where the auto sector goes through a downturn and the rest of the economy stays positive. We've seen that many times, but it can transmit. So I definitely think it's something to watch.
Great. Guys, thank you so much for this. Cap, Lakshmi, it's great to meet you both. I'm so glad you could join us. And Albert, as always, thank you very much, guys. Thanks very much. Have a great weekend.
Thanks, guys.
Thank you, Albert. Thank you.